afternoon, everyone, and welcome to Stock Market Today for Friday, December 27th. It's Alyssa Coram here, and I'm joined by my colleague, Mike Webster. We've got a breakdown of the action in today's session and a look at how this week panned out. So, today, the Santa Claus rally did fizzle a little bit. We did manage to bounce off lows, but Webby has all of the chart breakdowns and analysis we need to be better prepared as investors. So a lot to get to today, Webby, don't we? Even though it's a holiday Friday, we're not
Yeah, I thought it was
that
supposed to be a
stressed today.
sleepy week with nothing going on, but it is
Yeah,
what it is.
exactly. Well, and I know you spent a ton of time today looking at historical precedents that could provide a potential roadmap for what we're seeing unfold in the market now. So we thank you for that. And we're going to be
Sure.
sharing some of that research with the audience today. So we'll get to that in a little bit. But of course, we've got a look at the major indexes and we're going to take a look at some stocks as well, as always. So let's get right to it. First off, with a look at those major indexes. So the NASDAQ today closing down about 1.5% in today's session. Again, off lows a little bit here, but still down 1.5% on the day. Meanwhile, the S&P 500 down 1.1% on the day. Some support there at the 50-day line, but we are below the 21-day on the S&P now and below 6,000. Let's also take a brief look at the Dow here. Laggard still below the 50-day line. And let's take a look at the Russell 2000 small caps, still pretty damaged here. But our main focus, as always, is the NASDAQ and the S&P. So let's start, Webby, with your thoughts on what we saw with the NASDAQ today.
Yeah, so it's not so much today that bothered me, but it was more yesterday that bothered me because we had the bad break last Wednesday when Powell was talking and after the announcement, as far as the last cut, the market didn't like what it read, didn't like what it heard, sold off in a nasty way. And then we had, that upside reversal that was, very important a couple days after that. And we bounced up, which is normal and natural after you get a nice upside reversal. That's what you expect. If we would have fallen right away, then we could have like crashed, like, because it's normal to at least bounce up a little bit. But on Tuesday, on Christmas Eve, on the shortened session, which made it, tricky because when you've got a week where midweek one day is closed and the other day is half day and lots of people are on vacation, you can just have a lot of things that don't make sense because all the players aren't there, and the algos are probably even toned down a bit, so you can't read too much into this, which is our job, is to read into what's going on. But it makes it more difficult, and as well as the other things we're going to talk about that make this a very challenging time right now. I mean, it doesn't look like it on the chart. I'm very concerned in the short term, based on what I was seeing, and just to kind of go back through that. So we had the bad break on Wednesday. We had the
Mhm.
upside reversal. We had this very strong action on Christmas Eve with our low back above the 21 day, which is a very important thing for me, closing near the highs, closing back over 20,000. So with that type of action, with the market being paused for a day, I was expecting some thrust into new highs. When we didn't get that yesterday, I started backing away very quickly and throughout the day because that wasn't normal. And it just, um, you always are looking for what's normal and natural. And with that type of setup, we should have really taken out the highs yesterday. And so with swing trader, like, I was selling so much of the stuff on there that we were getting calls like, what is going on with Mike? Like, why
The
is he
market's
doing so much?
basically flat. Why are we?
Yeah,
Yeah.
and I was selling it. I would have like sold even more quickly, but we also know that alerts go out, and I know people are trying to follow along at home, and so I was trying to do it methodically. But I was really trying to get out as many things as quickly as possible before we had a day like today, because in at the end of the year, when you've got this, 1 or 2 weeks where a lot of people are on vacation, and then you've got the cross currents with people not wanting to sell their big winners because they don't want to take the tax hit in this year, They're waiting to do it next year. Some of them might do some hedging, which adds to more volatility in the market.
Right.
And you have everyone on the fence going, like, are they going to be selling my stock come January 1st or the first day of trading? And nobody really knows. And so there's all these possible air pockets that can happen. It just means a lot of risk. I mean, I'm still very bullish on the market, intermediate term and long term, but I'm very, very cautious in the short term based on the reaction that we had yesterday, even more so than today. Like today's action was like, oh, that's what I thought was going to happen. And that happened. So I like that more when I'm expecting something and it happens. Um, I wouldn't read too much into the bounce that we had at the end of the day, going into a Friday on a holiday week. And, we've got New Year's next week. So to me, I'm looking at this saying, okay, the upside reversal low needs to hold. That's very important. And Nasdaq looks really strong compared to some other things. Let's pull up the RSP, which is
Mm-hmm.
your equal weight of SPY, and that looks really, really sick. That RS line is
Yeah.
sick. It was bouncing up a little bit, but got stuck underneath, the 10-day there, and it's very vulnerable to taking out those recent lows. It got stuck underneath that marked high, the
Mm-hmm.
179.65, well underneath its 21-day moving average. So that's your average stock. That's the way I like to look at breadth. Everyone has their favorite measurement for it. This is mine. Let's just look at SPY, which is the benchmark that, for everyone in the industry, or pretty much everyone, that was able to get some support above the 50-day at the very end, but I think as a weak support with the high stuck underneath your 21-day. So a lot of what I do is always based around the 21-day, which is that green line there. And when your high gets under it, that's that's really a negative thing. Now, if we go back and move it back above it, I will be less
Mm-hmm.
concerned. But this feels to me like a market that wants to test that upside reversal. That would be normal and natural, is to see, like, are there really buyers there or not? And if you are swing trading, this is a very dangerous time. If you're swing trading using strength, if you're swing trading using weakness, that's not my style. That's a whole different game. But doing my style of swing trading, this is a dangerous time to get chopped up. So you want to wait and see, do we undercut that? And if so, I would love that. And to have a nice upside reversal, that'd be something great to trade against. But right now, even though we did get support at the 50-day, I think this market looks worse than it's showing,
Mm.
frankly.
So a week to reduce exposure further, it seems, or at least pare back after adding on that upside reversal seems sort of
Yes.
like let's see how this period of volatility unfolds over the next couple of weeks and just be careful because it can uh, chop traders up, as you mentioned.
Yes. And can I mute myself so I can cough? Because the
Yes,
last time it didn't.
producer Mike in the background, if you could help him mute, I will keep
Sorry.
talking. Meanwhile, I know this is what happens with long form you know, content. Everyone sees how the sausage is made. Okay.
Sorry about that.
No, don't be sorry at all. All right. Any other high level index thoughts or should we move on?
Let's look at IWM as well, because
Okay.
that's something that that a lot of people look at, and this looks like the RSP in a weak position where it broke the 50-day in a big way, and then is having this mediocre bounce up. So these are, your RSP, your IWM, your MDY. Those are all in weak positions. SPY is in somewhat of a weak position. Qs and Nasdaq, that's the strongest that you've got out there, and it still looks like it needs a shakeout. I want to be wrong. I would nothing would make me happier than to be wrong. But you just got to call it the way you see it.
Yeah, we'll have to see what the market gives us. Okay, next, do we want to take a look at a few ETFs just to get a sense
Sure,
of the flavor of
we can go
what?
quickly
Yeah,
because
well, let's
they're all going to
okay.
be about the same. Let's
Because
look
yeah,
at what
we've got
was.
a lot of precedents we want to look at.
Yeah. So we'll just kind of play through this without much commentary. Just I was expecting, I was in ARC. I was expecting it to actually get hit more than it did. It was down 2.79%, but you know, they trade in heat, or she trades in heat. And so I was expecting more selling. So that really wasn't that bad.
Yeah, the RS line still is
Yeah.
looking okay there, and that's what we'll focus in on. I would say same for discretionary, consumer discretionary. We know Tesla is a biggie in here.
Yeah.
Relative
One of my
strength line,
positions. Yeah.
same here, and still holding above the moving averages. We did add KWeb a couple weeks ago. We can probably take this back off again.
Yep.
That was just a little flash in the pan there. The biotechs still with a weak RS line. QQQ we went over. Uh, looking at the NASDAQ composite, this is the NASDAQ 100 still holding the 21-day line, relative strength line. Okay. But again, we'll give more perspective to the nuance of, what happens after a bad break with some historical examples. XLK technology sector, basically keeping pace with the S&P right now. XRT retail pulling back, not an area of strength, but still hanging in there. XME, the metals and mining, very weak. We covered how this was breaking down a couple weeks ago, and it has not uh, gotten itself back together. SMH, the chips basically flatlining this week, hanging right around that 50-day line. I think we have some levels on the upside and downside that we're definitely watching very closely there. Communication services, XLC, I think it's looking okay, pulling
Yeah.
back. Let's see how this digestion unfolds. Real estate still looking very weak here from a price perspective and RS.
That
Energy,
one, go back to
yeah,
that one
accelerate.
looks really spooky. Like that looks like if I was
Really
a
bad.
person who was short, who liked to short, which I don't because I don't do a good job at it, that's something I would be looking at because,
Mhm,
it's stuck underneath the 200 day. It's got that little ledge there, a ledge with a wedge to, a little bit of a
mhm.
wedge. That's something that looks like it needs a breakdown to resolve itself.
Thank you for pointing that out. Industrial, not looking much better here. Not under the 200-day, but still sort of this weak pattern there. XLF, the financials, hitting a little bit of resistance right at that 50-day and 21-day relative strength line. I mean, there's worse sectors, but there are definitely
Mhm.
better sectors as well. Financials coming right back to that post-election gap. We looked at RSP earlier. The gold miners, very weak here. Materials also extremely weak. Consumer staples trying to hold that 200-day line, a little bit of a tilt higher in the RS line, but nothing to write home about there. Healthcare continues to be weak. We've been looking at that week after week, and utilities too, after rolling over, continuing their weak streak. Energy, same. So there's not a whole lot out there that's looking good right now, Webby, in terms of the
No, there
sectors.
really isn't. Like we were struggling to find some stocks, to talk about. And a couple days ago, my mood was completely different because, going into the Christmas Eve action really had me encouraged. And we just learned from Bill O'Neill, the founder of IBD. You live in the moment of what the market is doing and what it's telling you, and you just have to be willing to be flexible and just kind of change with what the market is doing. But above all, this time of year is the hardest time to trade. The last week of December, the first 3 weeks of January, and I've said this before on IBD Live, that Bill O'Neill would say that if he was ever going to take a vacation, it would be in January because that's the trickiest. Not meaning, someone asked me like, "Oh, is it really trickier than September and October?" I'm like, "Yeah, because September or October is just thought of as bad months because you have some crashes that happen during those months. Plus, you have just the way the data falls, you're going to have some months that just have historically the weakest action, but you just follow the trend. You don't predict with those. You just say, okay, well, if we're trending up, then it's fine. You forget that September and October are tricky months. But with January, you can have a really good January that was very hard to handle.
Mhm.
So especially following in a bull market. So I would just temper people this enthusiasm and just be very, very careful going into the first, not just the first week, the first, 3 weeks of January.
Okay. Thank you for that, Webby. Let's take a look at a couple of stocks now. And like you said, it was a little tricky, a little hard to find anything that we were feeling excited about. But UAL does look good here. It is holding up in the face of a lot of volatility we've seen out there.
Yeah, one of the best looking ones out there, and it's total sleeper. I don't know why fundamentally. I used to go on UAL, all the time, and I didn't see anything really materially different about them. But let's go to the weekly, because the weekly really tells you something. And Bill would always focus on, 5 weeks or more in a row up, in how that was a sign that of institutions building positions. And that's something that I believe in and I've studied, and it's true. But look at all those weeks up in a row. Like, this is a high tide flag. To me, in spirit, this is very classic, and meaning you've got this rapid advance without really, it's not like in a flagpole with a high tide flag, you don't want to go back and forth a lot. You want it to be going up. And then once it's up there, nosebleed territory, you don't want it to give up much ground. And that's what I'm seeing with this. Like, there's something special there, because you can compare it to, like, let's look at Delta Airlines. All of them are looking okay, but not as strong as this. Or let's look at
Mhm.
Southwest, which is one that, I end up traveling on a lot because it just has the right connections for me. And that's just pathetic, compared to a UAL. Yeah, Alaska looks interesting, but this one, very, very unique action. Support at the 10-week line as you marked it. Let's go back to the daily. So this is one I never thought I'd get excited about, an airline stock, um, but this is one I'm super excited about. And if it breaks through there, I'm going to be buying it, regardless of what time of the year it is and what's going on in the market. And I was in it and I backed out of it this week just because of the market. It wasn't really doing anything wrong. It was just the market got me out of a lot of things.
Mhm. So, and I know, with your position size, you tend to, depending on the market. I mean, when
Mhm.
you're aggressive, you like doing a shotgun approach and then concentrating from there. How would you approach something like this with the type of market environment that we're in?
Well, so when I shotgun, I tend to do 1.25% positions, or 2.5. 2.5 is kind of my standard. Those are, I consider them baby positions. It's like they're, I'm allowed to, it allows me to do, 20, 30 names in a very short period of time. And cast that wide net. Whatever's not working, they just go away. And then I take those proceeds to add to the ones that are working. And in different environments, I'll either tone that down even smaller, or I'll start bigger. The bigger you start, the fewer that you can shotgun. So given that this is a rare pattern, and it's a quality name, meaning it's liquid from that standpoint, it's a big liquid name. There's a lot of high tide flags out there that are in the heat, that are kind of the ones that are all over the place, that could go up hundreds of percent in a short period of time. They could also go down 50% in a day. This one kind of isn't in that camp.
Right.
So I would go heavier. So if I'm doing 2.5% shotgun positions with a normal stock, I would be starting this one off with like a 15% and then building from there, just to give you a contrast, because it would be an
Hmm.
A caliber setup with
Hmm.
something that's proven itself with that weekly chart. But I'd want to do some more fundamental work to see if there's something, is it with their hedging or not hedging with their energy, with their fuel costs, or is there something else going on there that I just don't know about? I just haven't had the time to research it. Maybe someone
Right.
can put it in the comments. That
Yeah, maybe someone could put it in the comments. I mean, one potential thing to dig into more is this expected acceleration in the earnings growth
Mhm.
that's projected next year. So I wonder how the revenue estimates are looking as well. But we'll have to see. Okay, let's move on. And next, we want to take a look at BSX. This is Boston Scientific and holding the 50-day, setting up a clear level here just under 192.
Yeah, and so this has a lower ATR, average true range, so it's just not as volatile as other names, and that's why I was gravitating towards this one because if you're going to be trading, in this one, I would just do a 2.5% position, with it because it's just a run of the mill base, nothing wrong with it, nothing spectacular. The RS line is above its moving averages, but let's go over to the weekly and see if there's something better that we can see with it. It's a steady eddy, and you can see it's hard to see, but you've got a bunch of blue shaded areas in there, and that's 3 weeks tight, basically three or more weeks where it's almost unchanged. Let's go down to the quarterly information on there to see if there's anything to write home about. Well, you've got a little bit of acceleration with the sales, and the earnings are okay. So it checks off the boxes, but it's not a caliber stock. But it's also something you look at the history of it, and it doesn't tend to blow up. And that's what
Right.
right now I'm looking for, things that I don't want the heat for the next few
Mhm.
weeks, unless we get a nasty shakeout with a nice upside reversal. Then I'll switch gears and move back over to the heat because we'll have something to trade
Right.
against.
Yeah. Something to reset the decks a little bit,
Yep.
shake some people out, give us some new potential entry areas. I like it. Okay. And then we want to round things out for this section with a look at SE pulling back to its 10-week moving average. Big improvement in earnings in the most recent quarter, going back to triple digit growth there. A little bit of an upside reversal, some support at the 50-day today.
Yeah, and so what I like about this one is that you know that you're wrong right away. And that's what I was trying to find, things that you would know that you're wrong right away because it's down by its 50-day. It should get support there. So if this were to take out today's high or really yesterday's high, it would be something I would consider buying again in like a 2.5% position. But then if it closed underneath today's low, I would definitely be out. If it traded underneath today's low, I'd be starting to get out. And it's nice that it's been able to hold over that 100 mark. So that old Livermore level is important. You see that it gapped up on the earnings and came down and tested it, and then has been able to live above that level. It's a little something extra to help
Yeah.
out with, but the RS line is underneath its most recent move or its short-term moving average. So again, it's more of a C or a B caliber setup right now.
Okay. All right, Webby, are you ready
Yeah,
to
well,
share your screens? All right, let's
I'm
do
going
it.
to try. It's not letting me. It says someone else is currently
I
sharing.
maybe you were so excited, you were too fast and did it before I stopped sharing mine. Try again.
It's still showing that.
It's still showing that. That's fun.
Hmm.
That's really fun.
Yeah,
Yeah,
hey, look,
you
it's a
know?
live show. It's like Saturday Night Live, but better.
We've had some coughing from you, some sneezing from me. I don't know what's happening with
I don't know. Maybe our producer can help.
Yeah.
Maybe we could go on to some other stuff and see if that ends up working. But it's
Yeah.
just grayed out for me.
Okay. All right. Well, in the meantime, we can take a look at our precedents. How about that?
Yeah, let's do
Does
that.
that work? Okay. So I am sharing the slides. So first, Webby, explain to everyone what we're looking at here.
Okay, so this is something that I worked on with Justin, which last week, which basically means Justin did all the work and I took all the credit for it. So he has this big master spreadsheet of all the Nasdaq and anything important in there, and we've been working together for a couple decades. Where when there's something in the market that is unique, I'll say, "Hey, what? Give me a list of dates." When this happened. And last Wednesday, when we had that nasty break on the Fed day, I said, let's look at times when
Mhm.
when we were in a power trend. You had a bad break, and you started off the day where your high was above the 21 day. And by bad break, we define it two separate ways, and that's up on top and why it's shaded differently. In two ATRs that it fell in one day, average true range using a 21-day ATR the day before the break, or three ATRs, which is your list on your right. And we went over those together on air last week, but today I went and went through all of them again and marked a lot of them up and tweeted them out on my handle. It's M Uh, M. Webster, 1971. Why I have a brain freeze with my own name is beyond long week.
Yeah.
But a lot of those are marked up on there, and you're going to share a few of those.
Mhm.
Maybe we could look at a couple.
Yeah, let's do it. Okay, so first, here's a look at the current market, and the last little arrow is with the bad break that we just had.
Yeah, and can you make that bigger? Right now, I've got a big picture of me and you, and just a small one of the
Ooh.
the thing.
Hover over it on your end and see if you can pin it on your
No,
end.
it looks
No?
different than normal. But anyways,
Okay.
I'll deal. I'll have to look real closely. So the arrows are marked to the day in question, and so what I was looking at are ones that broke the way we broke and then tried to bounce the way we were bouncing, and then what happened afterwards. And that's what got me very concerned yesterday and today, was the action that happened afterwards. So you can see this one, the first one on your screen on the left, it broke and then tried to regain the 21 day and then fell quickly and had it came all the way down into your 200 day, which is that black line. That's not what you want to see happen. That is a concern. What you want to see is more what happened on the right side. That's why we're showing several examples here where you had that little bad break and then you immediately were able to close back above the high from the day in question, your bad break. So that second arrow, that's what happened. And then the third one, it was bouncing up. And then, um, is this our current market? I can't even see the
Yeah,
date.
it
Okay.
is the current market. If you wanna
Okay.
follow along with your own screen grabs, I can just, and
It's
blow them up on your screen, I can just tell you which time periods we're
Yeah,
looking
let's do that. That'll help out
at. Okay.
a lot. So that goes, now that I know what time frame that is, that one that happened in July, I think it was June, July. That's very, that is the complete thing that you don't want to see happen. And so if we take out this week's low, or that, this week's low, then we could go a lot further on the way down.
Okay. And so then our next example, this is 1983.
Okay. Um, And then I will pull up the 1983 over here. Well, anyways, having trouble there. So again, this is one there where you couldn't materially get up very high, and then you had a lot of time lower. I don't think we're in for something that bad or that prolonged, but it's just you want to look at the facts, and the facts are, when you have these setups, a lot of them need a lot of time or go a lot further down, or a combination of both.
Okay, this one is 1986.
Okay, so do you see how, when 5150 came out, how good the market was? So anyways, if you were,
Music
uh,
reference.
yes. So do you see how quickly that came down and was able to bounce up? And even when they bounce up, lots of times they'll come back in and test part of the way down. They will never, the good ones don't come all the way in near the lows. So this is kind of a model of what you would like to see. And this is still possibly in the cards. I just tend to be a cautious person. So when I'm seeing this, it's like I'd rather be cautious and have to switch gears and turn bullish
Mhm.
if we get something like this. So this is what I was thinking was going to happen earlier this week. But based on the action that we had yesterday and today, it's looking less likely.
Okay. Our next example is 1995.
Okay, so this one, that break was very severe and then bounced back quickly right away. Again, something that we didn't have. We had a material break, maybe not as bad as that one looks, but we haven't bounced up as quickly. We started to, and then we started failing. And so this is one of the ones that, even though afterwards, a month or so afterwards, you started running into trouble, that's not what I was concerning myself with, is really, can you get back into new high ground and stay there for at least some period of time, which this one did. This was a winning type of trade, but you had more of that follow through right away, and that's not what we saw this week.
Okay, our next example is 2000. This is one that we've talked about a little bit on IBD Live, and you likely have mentioned it on the SMT as well.
A million times, yeah. So I'll try to not do too much on this, but the January one of 2000 is one that we've talked about a lot about, and that's what I think we're more likely in that type of environment, where we go up, then we come back down again, and then we go up. That's excuse me. That's probably likely, but what I'm concerned with is the first arrow on there where you broke and you couldn't rally, and then you had to go down and test your 200 day. And so, again, just reasons to you know be cautious.
Hmm. And then we've got 2011 here as well.
Okay, so this one is near and dear to my heart because the second arrow is where we came up with the stalling rules because Bill was very upset with the PMs because we were the day before that gap down, we were all up to our eyeballs in stock and adding. And he's like, "Didn't you see there was 5 days of distribution?" At that time, he was in the mode of 5 days of distribution and you're out of the market type of thing, and that looked at that as stalling. And so we did a big Chuck, Justin and I did a ton of work and came up with all the stalling rules that we still use at IBD. But that broke, and you had this bounce, kind of like what it felt like this week. Then, it's just a mediocre bounce, and that's why I really want us to get back above the high of the break and close above that before I'm concerned. This is the one that's bothering me because I
Mm,
remember that one like it was yesterday. It was like it was just okay for a week or so. Then you broke
yeah.
materially. Um, so that's in the back of my mind of
Hmm.
I want to make sure that we don't get hurt with something like
Hmm.
this. And there was that one example that we just run back up. That's great. I hope that happens, but these are the things that bother me.
Hmm.
That one.
Yeah. This is the 1986.
Yeah.
Okay, and then back to the current market, just a little refresher now that we've
Yeah.
seen those examples.
Yeah. So with that, again, it just points to last Wednesday's high becomes a very important level for us to get back above. A closing of, you always look at things as first you've got to penetrate that level, then you've got to close above that level, and then you've got to get your low above that level. So it's
Mhm.
three different phases. Sometimes that can happen in one day if you get a big gap up, but typically it happens one, then the other, then the other. So that is an important level, like kind of an equator line that I've got. And until we get above that, and our low is above that, I'm going to have a kind of a cautionary bent unless we come down and undercut that our recent lows and then have an upside reversal there. Then I will get very aggressive very quickly because again, we'll have something to trade
Mhm.
against.
And then I guess would that be sort of in the spirit of this 2000 example?
Yes, exactly.
Mhm.
Yeah, can you pull up the 2000?
I have it.
Oh,
It's just
I'm
very small.
uh, okay. Now I'm seeing it. I
Okay.
guess there's a little bit of a lag. Yeah, exactly.
Yep.
And that's what I'm hoping for.
Okay. We'll have to see. All right, I'm going to stop my sharing and let's try again and and see if it'll let you share your
It's
charts, Webby.
still grayed out.
It's still grayed out. Do you want
It's
to
a touch
try
of
to
gray.
Yeah, do you wanna this is first time for everything because I we do wanna try to share your charts because it is
Yeah.
Friday SMT. Do you wanna try leaving and coming back, and I'll just stall?
Yeah, sing a song.
Yeah, there we
Van
go.
Halen would work. I'll
Yeah,
leave and come
that
back.
would be ideal.
Bye-bye.
Okay, you leave and come back. Okay, so Webby, he's going to leave just momentarily so he can share his charts because on Friday SMT, we always love that he gives us his added technical look at what we're seeing with the major indexes, with the regression channel lines, the different retracement levels that he's looking at, and so much more. So I always love seeing the market through his eyes. And so we'll have that in just a minute. I guess in terms of how I'm trading, whenever that bad break happened, I definitely scaled back my exposure, wanted to lock in some gains for the year. And I did also have some exposure to leveraged ETFs. So that was big sell signal for me. Dipped my toe back in the water a little bit on that upside reversal, but not in a heavy way at all. I've just been holding my winners that are still holding strong, leaning on those weekly charts. And which, speaking of weeklies, Webby is here, and I have a healthy amount of cash just waiting in the wings to deploy whenever we do get those great A plus setups in A stocks again. So waiting for that. Over to you.
I hope you took the time to tell everyone what a great trader you have become because we're
Uh,
so impressed with you and so happy.
well, I've learned a lot
Um,
from you, Webby.
no, you learned what not to do from me, but it's just so great to see how just I mean you've really blossomed. It's just it makes me so happy. All right, switching
Yes,
gears, taking a
good
step
times.
back. Here's a spy on a weekly, and you always do that, and just say, okay, is there something there that's unique? Well, what's unique about it is it's an inside week with a good candle as far as a positive candle when you just look at it at first glance. But then if you can see it, you've got the wick, the top wick is bigger than the bottom wick, which is a negative sign saying that you've closed well off your highs for the week. Let's go over and look at the composite. Um, and same thing here. In inside week, you like inside weeks. Inside meaning your high and low are contained within the high and low of the prior week. And those happen all the time when you just need to go sideways. So, best case scenario really is we just go sideways for a few weeks within the high and the low of last week, and just mark time. That would be a win. But let's just, for fun, let's just go ahead and look at the RSP and see what's going on there. And still a lot of damage. We'll switch over to the regressions, which is very important. And another reason why I was getting concerned on the Nasdaq. Um, we had this beautiful bounce. I mean, just textbook bounce off of your one standard deviation, your green line, on up to your white line, or what I call home base, where it wants to mean revert to. But then it really should have just hugged that line or gone higher. But instead, we had kind of a real break back down. We did close well off the lows, which is a good thing, but it feels like it's in a weak position that it wants to, come down and test your dash green line, which is your 0.75 standard deviations or worse. And we can switch over to the Qs, which did go below that one standard deviation today and did close below that 0.75. So this is certainly in a much weaker position than the NASDAQ composite. Let's toggle over to SPY.
Mhm.
And as we talked about last week, this broke the regression line. So we need to wait to use we need to wait, you know, 30 days or at least 20 days from now until we use a new regression, and we'll be starting off really using most likely using this low right here on the 20th as our starting point. So that old regression, which is another reason why I'm becoming more concerned
Yeah.
about the market, is we broke that. And then I think I still have the RSP, and that broke a while ago, and we're still
Yeah.
waiting for a new
Oof.
trend there.
Yeah, that
And
looks not good.
yeah, we'll toggle over to the
Retrace,
S&P.
yeah,
Yeah,
retracements.
the 50% retracements, and I'm using I've switched this over to the high from the 18th and the low from the 20th. And
Mhm.
just, you can slice this a million different ways, and
Right.
I do, and people should, but this is one way to slice it. And just saying, okay, we want to get back above that equator line, which is the high from the 18th, and we at least want to live in this box up here in this rectangle. We don't want to live down here. So today,
Right.
that close off the low, or that move off the low, was good. So that's a first sign
Mhm.
that things are a little bit better there based on that close. Um, and the same thing here with the Nasdaq, using the same dates. It was able to get back above there. So again, we will, if we start living in this area next week, we will be more positive. If we start living in this area, we'll be more negative. We'll just take it as it comes.
Right.
Switch over to the levels.
Sounds
Um,
good.
yeah, so we broke through the level on the 18th. That was bad. We came all the way down, down through these two. Did find some, we did bounce up there, but again, we ran into that same old level, and that became a ceiling, not something you want. We will go over to the Nasdaq. Much better look, right?
Mhm.
Yeah, and so this one, you want to know where you want to trade if we firm up next week, and this is remains the area. You were able to close back above your 21 day. You're up. If you just looked at this chart in isolation and didn't look at anything else, it doesn't look that bad. It's just all the other
Yeah.
pieces, IWM, the MDY, the RSP, the SPY, all those things that those are the things that are concerning me, plus the year end. But that doesn't look too bad. And we will finish this part up with the very basics. Well, I've got the cues up so we can stay there. The 21 day, we remove all the mumbo jumbo, all the extra lines, and we just look at the 21 day, which is your green line. We know that we're in a bad situation when your high is underneath that. You're in a good situation when your low is above it, and you're kind of in no man's land when you've traded through it. And we've traded through it right now, so we've got to wait to get that high back above it, or the low back above it. And let's go over to the composite. Same thing there, just a little bit better. Um, SPY, not so much. You're kind of stuck underneath there. Um, the MDY, the IWM, the
Mhm.
RSP, and so on and so forth, their highs are well underneath that. So that is a concern. I can switch
That's
over
very
to the
concerning.
the other charts if you would like.
Yes, please
O-
do.
Okay. See, I'm going faster.
Yeah, that was
Yes.
great.
Yes. So yeah, the other day my dad said, "Oh, you were speedy through that," and so I took that as because he watches all these. That like he wants me to be more speedy, so that's good advice. So here's the Webby RSI, and you can see on here that we don't have a Webby RSI right now because our low is not above it. So there's not a whole lot to interpret there. Which and the same thing for SPY. So we won't even pull those up. We'll switch over to the Bob Marley chart, which is your how much you are off your highs in terms of ATRs. The green space is 4 ATRs. Yellow is 4 to 8 ATRs. So with the Nasdaq, we're still fine. We're still in the green area. We don't want to come below this, which was almost four, is like 3.75 ATRs off the high. And the same thing with the Qs. That was about four off of there. But let's toggle over to SPY, see what that's looking like. That dipped all the way into the yellow territory and bounced, but is coming back down. So as long as during this time we stay above that, that would be acceptable. And we will look at the RSP and just this is a concern,
Mhm.
because we're d-
Mhm.
down in the yellow territory, and you really don't want to get into the red territory
Deep
because you don't get
yellow.
in. Say again?
I said we're deep yellow.
Deep yellow. Yeah.
Yeah.
So that's what we've got with that fun stuff.
Okay. And then circling back to just in closing, the homework you want everyone to focus on.
Yeah. So also on my Twitter handle, M Webster 1971. See, I
Mhm.
remembered that time.
Yeah.
I'm proud of myself. On there, I've put a bunch of charts where I went out to the end of January or near the end of January, took a snapshot of the NASDAQ in market surge and put them there. Now, I didn't do every year because you don't need to look at every year. You just need to look at the years that look similar to our current year.
Mhm.
So what's similar? Similar would be you're above your 200 day, your 50 is above your 200 day, your 21 is above your 50 day. Those are the ones that I focus on. That means generally you're in a bullish phase and you want to see how the last week of December and your first 3 weeks or so of January play out. And it's really eye opening to look at those the whipsaws that come out of the blue, and it's just another reason why I'm cautious. But you also don't want to get too cautious because you can get some moves. There were some years that were just, kind of mediocre, and then that January became the inflection point because a lot of people were just waiting, for that
Mm,
January, and you don't know. Nobody knows. I
right.
don't know. Jimmy doesn't know. Who knows? Somebody got that. But anyways, it, we don't know what's going to happen. There's a lot of people that are, waiting to sell, for tax reasons. We don't know if that's been resolved because of the option hedging that's gone on, or it's going to get really bad. It's just we're going into this risk event, and I will just say, I've been very in the past very negative on Powell of how he's done since he started, but then a few cycles back, a few press releases back, I was very excited for him because I thought, he finally got everything under control and was doing a great job, and I'm the first person to give someone a second shot. And I was like, yay, Powell, you're doing a great job. This last one, if people go back and listen to it, man,
Hmm.
they not good. Like, he started getting into the politics, and that was one thing that he was staying away from. And so I think that just brought more risk where people are saying, okay, he's playing politics with this, which maybe he should always play politics, but not play politics with one administration and not with the other. Just be objective. That's their job. So I think what I read into it and why I think people sold heavily, and we haven't recovered yet, is because it seems like he's determined to be behind the curve again, where he's going to wait to see how all the policies play out and then just hold off on more cuts. That's my interpretation. I could be wrong, but that's my interpretation of what he's doing and what the market reaction was. So, but given enough data, he's going to have to, if inflation goes up, he's going to have to do one thing. Goes down, he's going to have to do another. Same thing with employment. There's only so much politics he can play, but on the margin is what the market is concerned with. And so I think until they get a better sense for how political he's going to be, we're going to be in this choppiness. This is not a political show. I'm not saying one thing is better than the other. I'm just saying we deal with risk, and this becomes a risk event. Now dealing with Powell again, which means all the CPIs, all the
Yeah.
unemployments, all the jolts become an issue again, for the market. So recap: go through, study what happens after the bad breaks,
Hmm.
study the Januaries, and don't drink too much if you drink on New Year's.
Yeah. All right. Well, last Friday SMT of 2024. I can't believe it, Webby.
It's so
Can't
much
believe
fun to
it.
be back with
Yeah.
you and the whole crew, and we were on
It's been
with
great to
Chuck,
have you back this year.
on IBD Live, this morning, which was a lot of fun. So hopefully people who watch,
Yes.
if you dig this show, I don't know why you would dig this show and not tune in to IBD Live every morning. Do you?
Yeah. I know. Yeah, it's the place to get all the up to the minute analysis from us. I mean, we're looking at
Yeah.
things live in the first 90 plus minutes of trade. So it's always exciting. And yeah, I mean, when there are key days in the market, I mean, we're all over the action. So between IBD Live and S&T, we've got everyone covered bell to bell.
Yeah,
So
and you have a lot of different special guests that come on that are unique, but when then we have our own panelists, everyone from you and Dave and Ken and Chris and Justin and everyone, that they each person brings their own unique
right.
skill set, and then people can gravitate and say, oh, I really like how Ali trades the TQQ, and I really like how Justin trades you know these stocks, and how Ed looks at things. It's like there's something to learn from every single person on the
There is.
team, and I love it. Look, I'm not trying to sell it. We don't get paid
Yeah.
anymore for more people. I want more people to
It's
show
a
up
fun
to help.
community.
Yeah.
Yeah, I think it's made us all up our game and made us all better traders. So even the audience, they're pointing out stocks to us for our radar or interesting things that we may not know that maybe they're experts in a particular industry. So it really is a great community. So we love it.
Absolutely.
Brightens our morning every single day. And this brightens our afternoons. So, it's we're ending this week on a high note. It's always Webby. So thank you so much as always. We really appreciate it. Some great homework there. Thank you so much. Have a great weekend.
You
And thanks everyone for tuning in. Hope you have a great weekend, and we will be back here on Monday with more. So, as Webby mentioned, IBD Live, you can find out more details on that at investors.com/IBD Live. So, we'll see you there Monday morning, and then we'll see you here Monday after the close.